After the bell today, all eyes will be on chipmaker giant Nvidia as it reports its third quarter results. The company is the most valuable on Wall Street with the highest market cap by a wide margin. Nvidia leads the AI space as multiple companies compete for market share. But recent market performance indicate that investors may be losing their enthusiasm for artificial intelligence. So let's bring in CBS News MoneyWatch correspondent Kelly O'Grady for much more on this. She joins us live from New York City. Kelly, good to see you today. What should we expect from Nvidia today? And are we really facing an AI bubble here?
We might be, but you never really know if you're in a bubble when it comes to the market until that bubble pops, until it bursts. And then everyone looks back and they said, oh, wow, we were in a bubble. You know, valuations were much higher for these companies than they should have been based on the fundamentals. Nvidia, though, is going to be a really important bellwether for the AI industry. And we've talked about this before. They make the chips, the building blocks that all of these AI companies and startups use to develop whatever they are doing with artificial intelligence. So the few things that I'm looking for are, one, what has been the demand for those chips? Are we seeing these companies buy in droves? Because remember, Nvidia has a lock on the market pretty much. They own the majority of the chip market, so they are the main player. The second thing is the China of it all. Remember the China-US trade war, Nvidia has really sat at the center of one of the issues of being able to sell their very advanced chips to China. That's something that there has been bipartisan effort to prevent with this ongoing AI race. So will they be able to gain a very important revenue stream back in China? And then finally, the guidance. You know, the earnings, you look at how a company has done this past quarter, but most investors are always looking at how the company is projecting the next few quarters to the year. How much growth do they see? Do they see this economic uncertainty drifting into the AI space? Likely not. Likely it is going to be gangbusters in terms of AI spending. But the thing, Mugo, that's really important is there are always really high expectations for Nvidia. So even when the growth isn't as much as investors expect, you see the stock take a hit. So we're going to be looking for all of those things. And investors, you can very much assume there's going to be a big move in the stock one way or another after those results come out after the bell.
Okay, we'll wait for it. And Kelly, I want to talk about Target because they released their third quarter earnings this morning. Can you walk us through how the company performed and why they cut their full year guidance?
Yeah, so the company is not doing particularly well. We saw the third consecutive quarter where sales declined, and they looked at this on a store basis. So what that meant is essentially one particular store, they have seen same store sales decline over the past 3 quarters, so the past 9 months. Part of it is Target has struggled when it comes to its brand. There's been a lot of backlash because some of the choices that they have made, but also more generally, they are looking at a consumer that is tightening the belt. They saw consumers not come into their stores as much, also not frequent their website as much. And then when they did, they spent less every single time. Part of that is because Target, they have the nicer to have items instead of the need to have. Walmart is more where folks are going for the groceries, for the essentials. But definitely the CEO highlighted, you know, they are seeing a slowing consumer. It's something that they're trying to reel people in with deals, but they cut guidance for the full year because of that uncertainty and because of that slowing spending they're seeing from their base.
All right, Kelly O'Grady, as always, thank you so much for your insight. We appreciate it.